All right, folks, and the head of household as the filing status of the day. Really, not much to say about the head of household status. It's its own status, and as I mentioned earlier, it's just basically a status reserved for people that take care of somebody as a member of a household. That person can be a related person, such as a child. It can be also a non-related person that is just basically being taken care of by the head of the household. It can also be a relative that doesn't even live in the household, such as a parent. And that's really the only time where, to meet the criteria of head of household, you need to have the parent, the individual not reside in the actual household itself. And other than that, it's pretty stringent, and you have to pass certain tests. So let's go ahead and go over what are some of the favorable aspects of the head of household filing status compared to singles. And obviously we'll have, there's a very clear case of the tax law favoring the little guy, the one with the sob story. Hey, I'm this single parent, or I'm this, a single individual that's taking care of these people, and I'm basically, covering for their food, their clothing, all their living needs, and I'm spending money on it, so I deserve a tax break. Here's an example of the tax law favoring hardship situations in a way. So what are some of the benefits of this filing status? Is reduced tax rates, a higher standard deduction than single, more favorable AGI limitations applicable to numerous tax breaks, so not just one tax break, many tax breaks are favored. But you got to qualify, and in order to qualify, again, you're unmarried, but not a qualifying widower. Remember, a qualified widower has its own designation. So you're unmarried, and what's the first situation that should be popping up into your mind is, of course, that situation where you have an abandoned spouse, or you're just not married, okay? And then if you have a qualifying child, again, for most people, this is really just their biological child, somebody that they gave birth to, and they're just taking care of them all year long. It's not, and yes, in some cases, it gets very difficult to assess, is this child qualifying for this individual that's claiming to be head of household? And we have to give them very stringent tests, and they have to complete a lot of paperwork to reflect that they are in fact eligible to be able to have the dependency exemption for this individual, as well as the head of household benefits of higher standard deduction and child tax credits and all these other items of due diligence, which we have to document. And we actually have to go through a lot of stringent questioning of our client that deals with specifically, do they meet all the rules to be able to claim head of household status and receive this preferential tax benefit. Now, just keep in mind that more and more the IRS and other tax authorities have placed more on our shoulders as tax professionals to ensure that, yes, we're there as the monkey in the middle. Yes, we have to ensure that our clients get the best tax breaks that the law allows for, but at the other end of the spectrum, we're still licensed by the authority. So we still have to be the goalkeeper and say, hey, we're just allowing the deductions that you're legally entitled to, the maximum that you're entitled to, but nothing past that. Right? We can't have you doing frivolous things with your taxes, because then we're not allowing you to uphold the law, and we're here to help you uphold the law and get the most possible. So from both sides of the spectrum. So many people don't realize what a tricky situation that is to be in. And nowadays, since the compliance has gotten way out of hand, the government actually places a lot more of that documentation on us as tax professionals, and we have to do a lot more of what we call this due diligence. So when you're doing your taxes yourself, you can kind of just quickly answer those questions. But when you're coming into a tax professional's office, and sometimes it's not a very clear-cut case. Is this your child? Who else can claim this child? And who's currently has legal custody of this child, and how much money is being spent on this child by sometimes multiple people, right? You have the grandparents, you have the aunts and uncles, you have the primary caregiver, and so on. And it can become very complicated. It's not just straightforward as, hey, yeah, this has always been my kid, and there's nobody else claiming him or her as a dependent or as a qualifying child for household status or whatever. It's very clear cut. But sometimes and either way we have to document it. Either way we have to go through all these questions. But then sometimes we really break out much more of this documentation because we're dealing with already a not straightforward situation. There's more people involved, as I mentioned, and we've got to really bust out the pencils and add everything up and see who's providing the majority of the support. What is the eligibility here? Because again, to be a qualifying child for head of household, you have to provide over 50% of that support for that child. Okay, and that includes everything. It includes schooling, that includes their clothes on their back, food, shelter, you name it. So, and they're very specific as to what includes support. We have to go through what support actually means, because it could mean many different things, and some things are included as part of support and some things aren't. All right, not everything is automatically support. And yes, that child has to have lived with you for more than half of the year. They have to be, not filing a joint return with somebody else, and there's a citizenship test, social security number. They must have age test and relationship test. So there's all these different qualifications to become a qualifying child for somebody that's going to be head of household. I'm not going to go into the intricacies of those because each one is its own thing, and it can go on forever. This video will be much longer. And but you can also not only is it a qualifying child, but a qualifying relative. Somebody that's a qualifying relative is very common, would be just somebody that's a member of the household but isn't a child, and obviously so they're not in a great financial condition, and you'll always think of like a mom, an elderly parent, somebody like that, where they're not even part of the household, right? But they're being basically fully supported by their children. So the support test is still there, and they don't earn any money. They don't have any other means of kind of covering for their living arrangements. So they're still passing the relationship test, but they don't have to be a member of the household test, because they can be a member of their own household, but still be fully dependent on this child of theirs who's basically now, and that's the only exception to this residency rule. Other than that, they have to basically live with you, pretty much most of the year. It's not like, especially for the qualifying relative, it's like basically the whole year. And for the qualifying child, it's greater than half the year. I'm not sure why they have that, but I would assume that when you're dealing with, a member that's not like a child, they want to be a little bit more stringent. They have to say, well, this person really has to have lived with you the majority, all of the year for it to really qualify. All right, let's see. A married person's spouse is a non-resident alien, does not file a tax return in the U.S., would not preclude one from filing head of household. It's a very specific situation. I wouldn't really want to spend time speaking about it. It doesn't affect many people. And this just kind of goes into saying that, even though you don't meet the 50% support test, you can still claim that person as a dependent, as I mentioned, for other tax benefits, but not for the head of household benefit. All right, so in other words, you can get a greater benefit for that dependent, because there could be child tax credit benefits for dependents, okay? That doesn't deal with the head of household filing status. So you can still be like a single person with a dependent child, but not a head of household person, because you didn't meet, let's say, 50% support test, because there's a multiple support agreement, and this child is being taken care of by multiple people, not just one individual. All right, so that's just basically head of household in a nutshell. Hopefully that helps you guys out. Let us know if you have any questions, or other than that, This presentation was all on filing statuses and the intricacies specifically between married jointly and married separately. But we did touch upon, how they interact with one another, not only between jointly and separately, but also among head of household, qualified widower and single, and basically the differences and how they all tie in. Which was really interesting because there's a lot of information here. Overall, between these three, I think we're almost at solid 45 minutes just going over some of the very summarized information as to this complex area of filing. So just so you guys get an idea of what goes into each filing. Whenever we sit down and we prepare our tax returns, what is it that's crossing our minds? And what do we have to be ready for and know as tax professionals before we even sit down to help people with their filing? This is just a small snippet, and as you can see, this is summarized information. This isn't even expanded upon, because all these little segments expand even more and more and more depending on the situation. So just to give you an idea of how much knowledge and expertise has to be brought to the table for individual tax filing. People sometimes don't see the value in what we bring to the table, and they don't understand all the continuing education that goes on behind something like this that we have to keep up with, because the tax law is just constantly changing, it's constantly getting more involved, and it's getting more complicated for people to navigate on their own, especially with all these changes to the rules and then changes to those changes. So it becomes hard to just keep up. Where changes were less frequent, now they're even more frequent, and you're dealing with less tax professionals. There's less of us. There's going to be more. You'll notice these out-of-the-box services that aren't going to be very valuable to people because they're not practitioners that have been dealing with tax law and practice for countless years. There's nothing like countless practice that can be replaced, in a matter of a day. Because this is just something that has, for all of us as tax professionals, this is just something that a lot of we've just picked up with countless of scenarios that we've dealt with over the course of the years and have helped people, and in tandem have learned and gained knowledge by going through them. But it's a dying art, not a lot of accountants out there actually getting into the accounting field and and basically coming out as tax accountants. It's just not as many of us, and it's seen by the number of the age of the remaining accountants in the accountancy boards, and it's sad. It's sad to see the profession dwindle the way it's dwindling now. But with that, we'll probably enter AI, and we'll make all of this much simpler, hopefully, where people can gain much more effective use of an accountant's time, and we wouldn't have to help them navigate all these complexities, and we can spend more time perhaps doing other accounting functions that are less stringent on government compliance, and actually dealing more with the accounting side of things. And that's really what most accountants went to school for. Anyway, I'm getting way off topic here, and all you guys think about that, and hopefully again you've gained lots of knowledge from my presentation here today, brought to you again by Freyman CPA. Remember, our motto is your success means our success all day, every day. Have a great one.